Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 30th of August. All right, now, start of the month, or just about, the markets are really sort of heating up. And what I mean by that is they are getting extremely functional. Now, don't think for a second this is something unusual. This is actually the normal market conditions where specific data impacts the market. Now, dollar drops on jobs data, yen rises from 10-month lows. So if I just have a look at the charts, I'll give you a look at that first. The JOLTS job openings, and I mentioned this yesterday, I'd say it's like a third tier employment number, a pretty decent variance, and it has had a big sent a shockwave through the markets with the dollar index dipping lower. The key thing out of all the global markets is the significant rally here in the equity markets and the move on the dollar itself. Okay, everything's rallied against it. Even the cryptos are up. Oil back to 81. Euro coming back up towards that resistance level. Now, it tells me that the market is very sensitive, obviously, to the economic numbers at the moment, and in particular, US economic numbers. And what does that do for us? Well, it does a hell of a lot. Bit of a shockwave will come through the market come Friday's non-farm payrolls, right? The top of the pops as far as employment numbers go. That's going to be an electrifying event now, right? We've seen the weekly jobless claims numbers impact. Now the JOLTS job openings have impacted. So they were expecting 9.465 million. They got 8.8, right? That's a significant drop. Is there any correlation with the JOLTS job openings and the other data? Well, it's sort of a bit hit and miss. So we'll have to see what happens from here. But one thing is for sure, as we go through the rest of this week, the economic numbers will impact the markets, right? We have got free flowing markets at the moment, particularly obviously the US numbers, because the US dollar has been in control. So that'll rebound or ricochet around a lot. Just looking at the global currencies here, obviously the dollar index down pushes euro up, and you've got sterling coming back as well, Aussie and Kiwi. Now these significant moves down here in the dollar, right? It tells me that the market was positioned for a dollar move, right? All the talk last week was about the Fed, this hawkish stance. They may have to raise rates in November, all this sort of malarkey. Then we've got a third tier employment number really cleaning out the market. I'll tell you what, that's a bit of a tricky one, right? So, but don't overthink it. Think about, just focus on what's happening in the market, like the daily change in the equity markets up, and you can see the global markets go with it, global equity markets. Now, the Forex levels have just been reset, so you can't see as clear as day what was happening, but we have got a very clear risk-on profile, right? All asset classes, the US dollar is dropping against everything, so we are seeing a very clear setup. Now, if you've missed that move yesterday, right, and it came out of sort of left field from those job openings numbers, well, don't get all bent out of shape, because the next trading opportunity will be the good one, right? We know what's happening on the dollar. So when the next level of numbers come out, we know exactly how to approach them and what to do, whether they are strong or weak. We get weak US numbers now, okay? What you will see is a significant clean out on the dollar longs, right? They've been pushed into getting long with all the rhetoric about the Fed, as I said, and strong numbers. It's all about employment now, and non-farm payrolls will become a huge magnet as we head through Wednesday and particularly into Thursday. We've got some great lead-in numbers. So just be prepared. If these PCE price index numbers come Thursday, right, come out stronger, we're going to see a rebound in the dollar. Or we can see a clean out. The inflation numbers now. So with that move in the dollar, euro is at a great resistance level. So it's a great time to be looking at the German inflation numbers. Anyway, this has really electrified the markets. I love the fact that all these instruments are sort of moving around, right? It sort of takes a lot of the pressure off the dollar, right? If I just come back to the charts and just looking at those global markets, the bigger trends, right? Now the dollar has been sort of pushing higher. This is what could potentially happen. If we get weak non-farm payrolls or even weak US numbers through the week, we could see a really big flush out and then retracements back to the levels that these instruments were prior, right? So it gives you specific targets. It gives you entry levels. It gives you a lot of detail, and it makes trading easier, right? Once we know where the market bias is, it's easy to pick off the currency. So for me, from here on in, the rest of the week, it's going to be pretty active. Now, for those traders, don't forget there's a cycle. So for those traders in the Australasian session, things may calm down. You may see a bit of a retracement. But then during the European North American sessions, you'd expect the dollar to come back. Obviously, it's going to be data dependent. All right, so make sure you're trading the right instruments in the right direction, and then you can't come unstuck. All right, it's going to be pretty active from here. And if this is a sign of what we've got to come, then the next couple of weeks, right, is going to be super fun because we're going to have lots of moving markets. We've got lots of trend lines in play, and we'll be able to pick the market off. All right, guys, have a good one. All the best. Cheerio.